Moving on to our market report, we do this every single time because we want to keep our investors updated on how the market's doing. And you should be digging up these stats however you can so that you can keep an eye on how your properties are doing as well. We do showcase certain numbers every time. And what I want people to look at now is what I pretty much say, as the market has been kind of similar all year long, these few lines that I want you to look at: total sales, active listing, and average price. Total sales are falling. We're seeing that because the price in Calgary went up quite a bit this year. You can see that the average price is up 15%. That's massive. If you can do a certain investment and get the 15% growth in 1 year, if your RSPs are doing that, your stocks are doing that, that's great. But that's just on the price side. Our investors are also getting other rates of return. They're getting mortgage pay down, and that mortgage pay down is roughly 2.2%, and they're cash flowing. Yeah. So there's more than one rate of return. That 15% growth is great, but if you invest with us, we'll show you how to get more return than just that 15%.
Yeah, so what we do is we study the different areas in Calgary, and I have to tell you, Tim, Evergreen is a popular, just talking about Alex there, Evergreen, Tim, I didn't even realize this, and that's what's so good about Tim and myself going out, helping our clients rent these properties out. What's so good about it is we get the pulse, we get the feel of what people want out there, and everybody coming to see this house is a family. They want to put their kids in those schools, and they just love Evergreen. And if we talked about Evergreen about 2 months ago, Tim, we wouldn't be so excited about it just because we're living it and going through trying to get a property rented out there. But okay, so where is Calgary going? You're probably all sitting there wondering, okay, well, we went up 15% this year. Where are we going? We are nowhere near where the average price should be in Calgary. We see the average price going to $750,000 to $800,000. We don't know exactly when this is going to happen, but the reason why we could be so confident about this is that what's going on in Ontario, just with their prices, with the cost of living, the taxes they pay in BC, they're not landlord friendly there. We're seeing that Calgary has the infrastructure. We have the building that's going on right now, so the inventory is coming up. And what you're going to see is a lull period to now till the spring market, okay? And what we mean by that is people are sitting on the sidelines because of interest rates. And the election just happened in the States, so we know what's going on there. But people are just waiting for those interest rates to come down. There is no hurry. They may be locked in, Tim, into their mortgage that they signed a few years ago, so they're doing good on that. But we know all of these mortgages are coming up in the next year. Yeah. So there's going to be a lot of movement. There's going to be a lot of people that are renting. They were forced to go and rent because prices were so high. They're going to be sick of renting because that money's just being thrown away, and they're going to get in the market, which is going to drive the market as well. And we can't keep up. The building that's going on right now in Calgary, it cannot keep up with demand going into the spring market, simply because 60% of buildings being built right now are purpose rental buildings. Okay, so we don't have enough owner-occupied buildings being built, especially downtown. There is really no towers going up downtown. So what you're going to see in that condo market, and Tim, the condo market went crazy this year, you're going to see that again as well, just because there's going to be no inventory for people to buy.
Yeah, so I guess that leads to our next slide, where we have the different property types. And if you look at the bottom right-hand corner of this slide, you can see the increases that all the different property types had. It's all above 10%. Like, we've had some huge increases in condos, in townhouses, in semi-detached, and in detached homes. We see that continuing because of our immigration. Now, you might have read in the paper that Trudeau's going to slow down immigration for the next couple of years. He'll slow it down, but he's not going to stop it. And all these new people coming into the country, yeah, they'll land in Vancouver, they'll land in Toronto, but guess what? It's so unaffordable to live there. They can't possibly buy a house and live there. So they're going to spread out across the country, and Calgary is the next most desirable area, we believe, for these immigrants coming in, and that's going to drive demand. So unless we can build the supply fast enough, we're not going to, keep up with that demand. and that's going to drive prices even higher. And that's what Azad was talking about, that $700,000, $750,000, $800,000 average price that we're anticipating here. And even if it went to 800,000 in the next 2 or 3 or 4 years, we're still, 300,000-400,000 behind Toronto and behind Vancouver.
Yeah, so we're totally confident. And then you just go down the list here. You look at semi-detached and you look at row townhouses, 450. A townhouse average in Calgary, if it's a 1,200 square foot townhouse, near good amenities, schools, shopping, transit, it should be upwards of 650,000. So the townhouse market, you look at the condo market, these same condos on average in Toronto are 900,000 plus. So we're way behind where the averages should go. And those, our next seminar, Tim, we're going to go through categories in depth, but Tim, right now, the detached, semi-detached, all of these segments are going to continue to go up just because you may not think it, but it's still affordable to people coming from the East Coast and the West Coast.
Yeah, and as interest rates continue to go down, it's going to make these properties, even at some of these high prices, more attractive to investors, because the interest rate and the mortgage payment that you have is a huge factor in determining whether your property cash flows or not. We'll get into that a little more as the seminar goes on, but that's also going to be a driving factor in the demand for 2025. And our next seminar 2 weeks from now, we're going to talk all about how the city of Calgary is going to do, where the best places to invest, the best property types to invest in 2025. So that one is a must watch.
Yeah, one last point on this market update is the rezoning factor. When that rezoning came in, I know a lot of people are against it. Don't yell at Tim myself. But at the same time, what happened is land value just went through the roof. What we're talking about is a 50-foot lot on 37th Street and out the door there went from 600,000. We paid 800. Now they're all up to 900,000 on a busy road. So once that rezoning came in, prices went through the roof. So you can't get land. You can't get a good piece of land. If it's a corner lot, even better. You're paying upwards of 900,000. And then building costs have gone up, right? So you can't build, for example, a bungalow these days. You can't build for under, Tim, if you're buying anywhere to build a new bungalow, you can't build for under 1.2, even if it's just a standalone bungalow. You're paying $800,000 for the lot, unless you're in Bowness or Ogden, which is going to continue. Those areas that were softer areas before, it's just going to get more expensive in those areas.
Yeah, and one thing we're going to talk about in that next seminar is the advantages of the Northeast. A lot of people want these property types that are very, very expensive now in the Southwest or the Northwest. You can't buy around the university anymore. You can't buy for rental properties that I'm saying that it'll cash flow. You can't buy around, the hospitals. So where are we going to go to find cash flowing suited properties? The Northeast. Yeah. So we're gonna expand on that quite a bit in that next seminar. And we don't really rule out any community now. 10 years ago, there were certain communities we would not let our clients buy in. Now that the city has grown so much, the infrastructure's grown, there are communities all around the city that make great rental communities. So
for sure,
we'll get into that. Next, we're going to talk about Danielle DeMarco. She is our real estate investment mortgage go-to person. She not only gets you a mortgage, but she develops a real estate investment plan so that if you want to buy more than one property, she sets it up so that you have a plan to get to your second, to get to your third, to get to your fourth. She unfortunately can't be with us today. Her contact info is there. So if anybody is looking for a mortgage broker that understands the real estate investment game, Danielle is our go-to person. She will be on our seminar in 2 weeks to discuss where she thinks the mortgage market's going to go next year. So that's another reason to attend that seminar. That's it for our market report. We really do want to keep our investors informed on what's going on. We've had a tremendous year so far price-wise. So everybody who has owned or bought this year, they've all made money already. Just because of the increase in property values.
Yeah, exactly. And some of you might be sitting there, we hear this every day, like I should have bought 3 years ago, 4 years. You know what, Tim and I, we owned a lot of real estate, over 25 houses here in Calgary. And most of the properties we bought were at the top of the markets, okay? So we want to stress that it's all about getting in.